Good afternoon. Getting right down to business here. We are doing it live right here on 790 KABC, streaming live online worldwide at KBC.com. And your on-demand Mottek On Money podcast, KBC.com, Apple, iTunes, all of your favorite podcast platforms. Stay tuned this evening at 6 o'clock for the Just Help One radio show and podcast presented by the Union Rescue Mission. I'll be back on at 6 o'clock this evening with Mark Hood, the CEO of URM, and Richard Newcomb, Vice President of Philanthropy at Union Rescue Mission, along with special guests, including Christina Pascucci. So stay tuned tonight at 6 right here on 790 KABC. Right now it's Mottek On Money, and we're looking at stocks trimming losses today. The NASDAQ managed a closing gain, putting it at a record high. Mixed finish overall, though, with President Trump's tariffs hitting dozens of U.S. trading partners. The president also previewing coming chip tariffs, suggesting a carve-out that could benefit big tech companies. The NASDAQ closing of 73 points, taking the spotlight today at 21,243. The Dow closing lower by 224 points at 43,969. And the S&P 500 closed down 5 points at 6340. In all this, we saw the price of gold move higher as tariffs on imports from nearly 200 countries rolled out. The price of gold popping right now more than $36 at $3,491.50 an ounce, getting close to $3,500 again. Silver just below $39 an ounce, and platinum is hovering at around $1,361 an ounce. Year-to-date, gold is up more than 30%, by the way. We did see stocks trim losses and the NASDAQ turning higher after President Trump nominated Stephen Miran, the current chairman of the Council of Economic Advisors, to serve on the Federal Reserve Board of Governors until January 31st, 2026, following Adriana Kugler's resignation. The president's deadline for trade deals kicked in overnight. Imports from nearly 200 countries now facing duties ranging from 10% to 50%, and the overall average effective tariff rate is projected to jump to nearly 19%. Apple shares climbing again today as the president and CEO of Apple, Tim Cook, announced the company would make a $100 billion investment right here in the USA. As part of this, Apple will make the cover glasses for iPhones and Apple Watches in the state of Kentucky. President Trump's comments that he'd exempt some companies from his plans to place 100% duties on semiconductors gave some of tech stocks a boost today. NVIDIA shares moving higher as well in all of that. We're also watching some IPOs today. Firefly opened at $70 a share, 56% above its IPO price of $45 a share. We'll be taking a closer look at that. Firefly is a part of NASA's Commercial Lunar Payload Services program. Mortgage rates, have you noticed, dropping sharply this week after the jobs report came out last Friday, and there were also steep downward revisions to previous months, stoking new concerns about the health of the economy. The yield on the 10-year note has pulled back, and the average 30-year fixed-rate mortgage now at 6.63%, according to the latest survey from mortgage giant Freddie Mac. Looks like the guessing game continues as to who's going to be the next Fed chairman. We've seen some write-ups on that. And we're also watching the impact tariffs are having on the car business. Another write-up in the Wall Street Journal today. Somebody got out the calculator to figure out what it means to car makers and ultimately you, the consumer. We'll get the latest on all that from Lauren Fix, editor-in-chief of Car Coach and the co-host of the Total Car Score podcast. Big day today in downtown Los Angeles, the State of L.A. Business event held by the L.A. Area Chamber of Commerce, organized by Maria Salinas, the president and CEO of the L.A. Area Chamber of Commerce, who was on honor emceeing that event today. The keynote speaker, business and civic leader Lou Horne, leader of CBRE here in Southern California. Lou Horne gave the keynote speech and will be joining us live on this program coming up later this hour. But first, on your money, the markets, the economy, and the whole works now. Joining us live now, veteran market strategist Bryan Perry at BryanPerryInvesting.com, also author of the 25% Cash Machine. Bryan Perry, great to have you with us. Thank you so much for taking the call here this afternoon.
Thank you, Frank. Always great to be with you and your audience. We've entered the month of August, which historically is a tough month for stocks, but maybe not this year. You know, this is one of these very special times where we have a major transformation in technology, unstoppable spending in a particular, area of the economy here, meaning artificial intelligence. And in general, the economy is doing pretty well here. There's a bullish inertia under under the hood here, which is at work due to, really unrelenting optimism around AI spending, which has kept the markets near all-time highs because of the heavy-duty weighting at the top of the indexes by these mega cap tech companies here, which dominate the Nasdaq to the tune of 50 to 55% weighting, and as much as 28% on the S&P 500. So even as there are certain economic fundamentals that are wobbling, if you will, the job market, that one report doesn't make for a trend, but it does. The revisions were just massive, and it just so whether or not that was justified by President Trump, letting go of the BLS commissioner or not, that's a hard call, because it's really, I think, hard to get around the hard numbers at sometimes, because there's a lot of input that goes into those reports. As you noted, Apple is this the latest report here to continue to stoke the onshoring trend here, which is pretty big, but that just means things are actually going to be more expensive going forward, in my view. You got this Fed looming pivot here coming up in September with a quarter point. Maybe even if we get further weakness in the job market, Frank, then the half point cut is not out of the question here to play some catch up ball on disinflationary forces that are happening within the labor market here. So that's not out there yet being talked about much, but between now and September 17th, when the Fed meets again, it's going to feel like a lifetime. That's 5 weeks. A lot of economic data coming in. The dollar, rallied a bit, and then now it's heading back down toward the lows here. Hence, you've got this big pop in gold moving higher at 3,500 near the high. It's been about a 4-month base in gold, and I'm thinking that the gold's going to continue to push higher here in this next move. Should be taking out the 3,500 level and then moving toward 3,700 here, based upon the fact that there is no consensus on how tariffs are going to, really, make up the difference between the cost of financing the deficit if all these tax cuts and all these tax breaks are going to take place at the end of the year. The market's really grappling with that. The treasury market is. And today's 30-year auction did not go well. That was, the bid to cover on that was only 2.21%, not percent, but $2.21 to debt. And you want to see at least a 2.5 bid to cover as a healthy treasury market. So long end of the curve is under pressure here because of people see this inherent risk as to whether or not all this the promise of prosperity is really going to do the job of debt service. Chris Waller, I think he's going to become the new shadow Fed chairman in terms of the candidates that are out there, that are up for nomination. I think he's the natural fit what's going forward here. And he seems like he's got, the approval of most of Trump's inner circle. Second quarter earnings, Frank, have been pretty good. We're 2/3 of the way through the season here, and about 80% of the companies that have reported within the S&P 500 have matched or beat estimates both on sales and earnings. So that's a really good report card here going forward here. And I'm thinking that going forward, you didn't see a whole lot of negative guidance here about tariff impact, but that's really what the third quarter, what we're currently in right now, is going to be. This is the really market trade uncertainty and all this stuff that's happening today in terms of the new announcements. This is all kicking in as we speak. Is going to start to play out here in the next 2-3 weeks, and we're going to start to hear a little more commentary from companies that are going to start to see price inflection here on some of their supply chains. So all of this casts a bit of uncertainty here in the third quarter. And I think that, overshadowing all these things here is going to be, it's kind of a wash between maybe taking some money off the table here and going through what are historically very tough months in August and September and trimming positions here that you had good gains in and holding on to your real leadership names in the AI spend, because that still looks like that's going to have more room to run.
On there live with Bryan Perry, veteran investment strategist, BryanPerryInvesting.com, also author of the 25% Cash Machine. Apple on a tear here compared to where it's had been stuck in the mud here during this big tech rally, up nearly $7 today at $220 as Apple finally come back to life. And it's interesting to see this move in the context of Apple increasing manufacturing on this side of the pond.
Well, you saw Tim Cook in the Oval Office and doing in a helicopter pattern over Washington D.C. So This is a seminal moment for Apple here. They don't have a major AI strategy. I think they're going to actually buy their way into this whole, to capture the moment and catch up with everyone else that already has, a major AI platform in place here. So look for Apple to make a big splash, and maybe Proximity, which is still a unicorn out there, is the next, generative AI, takeaway from all of this. We'll see. But they're going to announce an iPhone with an AI feature, and I think in the not too distant future, which is going to propel the stock higher on anticipated sales here. And they did pretty well in China here, and the fact that they're coming in to spend $600 billion in the U.S. to onshore some of their manufacturing it's just so huge that the stock here now trades right up against its 200-day moving average. It's got to get through this 220 level here to really break free of this technical damage that it's been going through. But it's been chopping a lot of wood here for the last 4 or 5 months. Their earnings actually were better than expected. And I think that the stock here has brought in institutional money in the last couple of days here, which wants to believe that this company, down from 260 to 220 is a bargain at these prices.
On there live with Bryan Perry, BryanPerryInvesting.com, and author of the 25% Cash Machine. We see crypto right now well below its all-time high, Bitcoin anyway, at 117,487 here at the moment, as the NASDAQ has hit a record high. Ethereum now at 3903. That one's moving higher. Doge at the moment at 22 cents. Give us your thoughts on what's happening in the crypto space with the NASDAQ at a record high here today.
Well, you've got two things there. One, it's a risk-on environment for all things AI. Not necessarily all things, but all things AI. And that you also have Bitcoin, heading back up around 3,900 today. I'm sorry, that's Ethereum, but Bitcoin at around 17 and change. That looks like, it's going to start to work toward its recent high in the 19,000 area, with Ethereum making a bold move here. I mean, a really bold move here from below 2,000 up to 3,900. So this is really taking on a whole new life. As Ethereum has just, really made up a lot of ground here. What I see here is, the dollar again is weak. Gold is strong. So you're looking for, storehouses of wealth that may not just be only gold, but other digital currencies. The whole, movement toward regulation and stable coin at the congressional level is bullish for cryptocurrencies in general. And now you have these treasuries that are coming out in the treasury ETFs, if you will, in treasury companies here, like Strategy, which is Michael Saylor's company. He's the largest holder of Bitcoin in the world here. So if you just want to say, I want to buy and hold Bitcoin, you can just buy MSTR, and just say, I'm just going to let Michael Saylor figure this out. He's got a massive position with his total treasury trading below its net asset value for the Bitcoin he owns. There's another one here, that was launched by Tom Lee. BMNR is the symbol, Bravo, Nancy, Mary, Romeo, and that's the Bitmine Immersion Technologies Corporation, which is a treasury for Ethereum, Frank, and they've got a massive position in Ethereum, and and this is just another way to say, without trading Ethereum, you just want to say, I want to leave it up to the experts that are buying the stuff at the right prices and buy and hold. Then that's one way to do it, and I think that's an exciting new product. The thing, it went from $5 to $160, in no time when it got launched. It's come back down here to $40 and really found support around $36 to $37 here. So people may want to, it traded 65 million shares today, Frank. This is unheard of type volume in these types of securities. So there's a lot of big money. This isn't retail. This is, institutional money here. So take a look at something like that if you're looking for where the money is and what it's flowing into in terms of what they call these treasury securities now, as opposed to just trading securities.
At this point, Bryan Perry, let me ask you the big question we ask here. As you well know, any specific places where we are putting money now and or taking it off the table?
Sure. In the last couple of days here, given what's all going on with the Mag 7 here, we've seen 3 winners and 4 laggards in the Mag 7 here. So we've seen Microsoft, NVIDIA, and Meta, really hit it out of the park, doing really well. Whereas Google, Apple, Tesla, and Amazon are they're on deck trying to catch up. So there's an ETF called the Roundhill Magnificent 7 ETF. The symbol's MAGS, M-A-G-S. I've been buying that because I do believe that we're going to see a move higher by Google, Apple, Tesla, and Amazon to complement what is already going on with Microsoft, NVIDIA, and Meta. And so at $58, $59 here, which is, I think it's a way that people can cast a net over the Mag 7 without paying these, exorbitant prices for the individual stocks and diversified risk, and be in the market leadership during the months of August and September, when there's going to be nothing but more good news pouring in about AI, but also people saying, you know what, I just don't want to chase one or two stocks and maybe, just be, catch a falling knife on bad days. So that's what I'm doing here as well. I'm also buying a company called NBIS, NBIS, as in November, Bravo, India, Sierra. They are an AI infrastructure company based out of Amsterdam. They had blowout numbers today. The stock was up $10 to $65, 18%. And if you can catch that on a pullback, then you want to be there. Uber announced great numbers, and they announced a $20 billion buyback. They are coupled with Waymo in the whole ride-sharing business, and right now they've got a big lead on Tesla in this whole ride-sharing area. Stock's down from nearly 99 to roughly today around 92. That's a good, dip on the stock. You can also take a look at, definitely Apple. I've been buying Apple yesterday for accounts, full discretion, and also bought yesterday Coinbase. Coinbase is down from 450 to 300. Okay, so this stock got way ahead of itself going into this whole regulatory environment here, Frank, and it's come way back in and regrouped itself here. So coin in the last couple of days here looks good. And that's Brian Armstrong. He's just a dynamite CEO in terms of a trusted exchange with just a serious future. And then lastly, people looking for cybersecurity. CyberArk just got taken out. We've talked about that for many, many weeks and months. And so that took that out, and I sold that position. And now in here we go and look at Rubik, RBRK. It went public here a while ago. It traded way up and it's pulled back here. So this is, I think, the next big thing in cybersecurity. And I would have people take a look at this. It traded as high as 100 and change, and it's around 90 right now, doing a lot of consolidation. I like that. Coming off, Honeywell. I'm taking half positions off in here, Frank, of companies that have made a nice move. And coming in again, I think it's a good time to trim and hold half your positions in winners like GE, Capital One, SoFi, Shopify. I sold out completely because of the Canadian tariffs. Sold half my Chevron, half my KKR. So I'm coming out of positions here that are overbought and looking to maybe take a full position in October, November when the market firms up, usually for a year-end run. But this is a good time to trim. Hold your best names in your AI full positions, NVIDIA, Broadcom, Oracle, things like that, and also, but at the same time, if your stocks haven't moved in this market, I got out of 3M and Honeywell, and you've had this big move here, then you have to look yourself in the mirror and say, man, maybe I should just reconsider redeploying my capital into some stocks where there's real money flow.
Terrific, Brian. Thank you very much for that thorough assessment. As always, we do appreciate it. You got a lot of fans here and listeners in Southern California. Brian Perry at BrianPerryInvesting.com, also author of the 25% Cash Machine. Brian, thank you very much for joining us live here this afternoon.
It's always great, Frank. Thanks so much.
Thank you very much. And now to the freeways now, 790 KABC. Mottek On Money continues, 790 KABC. Good afternoon. Record-shattering day for the NASDAQ. The return of the MAC on the NASDAQ. Hey, it rhymes. Up 73 points, 21,243 for the tech-heavy NASDAQ. The return of the NASDAQ, let's call it that, okay? S&P 500 slipping 5 at 63.40, and the Dow down 224 at 43,969. Mixed finish, but the NASDAQ, the winner of the day, and at a record high. The volatility index, the VIX index, so-called Wall Street Fear Index, pulling back 1%. Gold moving higher, more than $36 here at the moment, getting close to $3,500 again, which would be the record high, just above $3,500. We're at $3,491 and change. Silver up 36 cents at $38.65. Platinum up more than 7 at $1,361 and change. Apple coming to life this week. Tim Cook at the White House. Apple up more than $6, up nearly $7, as a matter of fact, at $220 and change. Microsoft up 4 at $520 and change. NVIDIA at or near a record high here today, up $1.35 at $180.77. Turning to the cryptos now, we see Bitcoin hovering at around 117,400, Ethereum at 3903, Doge at 22 cents. And now the latest news on 790 KABC.
Welcome to NFL Flag.
Are you ready? Yeah! Are you ready? Yeah!
No matter who you are, lace up your cleats, smear on your eye black, step out on the field and chase something. Chase a goal.
Let's get it!
Chase the big time.
Get that, ladies!
Chase rings. Chase gold medals. Chase all of it. It's all up for grabs now. NFL Flag. Chase something. Visit NFLflag.com to find a league and start the chase today.
Hey there, I'm Paula Pant, host of the Afford Anything podcast. I help people make the smartest money decisions possible because let's face it, money's too important to wing it. From investing strategies to economic trends to savvy travel, lifestyle design, and beyond, we're in this journey to financial independence together. Remember, you can afford anything, just not everything. So, afford anything. Follow and listen on your favorite platform.
Big day in downtown Los Angeles where business and civic leaders gathered at the LA Area Chamber of Commerce's 2025 State of LA Business Conference, bringing together the LA area's foremost voices in business policy focus on the economy and LA business landscape, and the second largest economy in the Western Hemisphere, by the way. It was an honor emceeing that event today and being there with LA Area Chamber President and CEO Maria Salinas. The keynote speaker today was LA business and civic leader Lou Horne, the president of CBRE's Greater Los Angeles region and chairman of the Urban Land Institute. He also previously served as chairman of the LAEDC. Lou Horne joins us live here this afternoon. Lou, thank you very much for taking the call here today.
Thank you, Frank, and it was a joy to see you today moderating. That was fantastic.
Wonderful to see you, and thank you so much for taking the call here. What you demonstrated today was a master class on how to deliver a keynote speech and on your expertise on commercial real estate. For those who were not as blessed as I was to have seen it in person, tell us your message to the business community there today.
Well, the message, there was a couple of messages, Frank. First, it was really just an update on really all of the different sectors that have been impacted by this uncertain first half of the year for 2025. I talked about just the change in the office sector, the changes in the retail sector, the changes in industrial, and also in multifamily. And then I also just expressed the importance for a lot of our business leaders now to become more engaged with civic leadership and helping our elected officials have to make some very important decisions that they need better data from the private sector, and it was just really a message around that.
Very interesting details regarding what's happening in the downtown Los Angeles area as far as office space is concerned, as the slow return to the office continues coming off the pandemic, which you highlighted. Tell us about some of those insights, please.
So with the office sector through, I think, post-COVID and really all the way into this year up into this point, the office sector has been impacted more than any of the other four sectors, primarily because of the uncertainty around return to work. It's impacted demand. And for those companies that are expanding, they're really focused on safety, on perception, and on making sure that they're putting their employees into an environment where they can attract and retain talent. And so we're seeing kind of the tale of two cities. We're seeing, a lot of activity in Century City that's really impacting prices. There's a new JMB building there that's just about been completely pre-leased. There's pricing that is achieving all-time highs in that marketplace. And that's really making some of the surrounding markets in Los Angeles suffer a little bit. Now, that said, over the last 2 months, we've seen a big uptick in a lot of smaller tenants in the areas, particularly in downtown Los Angeles. And also, we're seeing a lot of large renewal work, companies recommitting and doubling down on downtown Los Angeles. So we're really seeing it's a tale of two cities. We're starting to see the bottom relative to capital in terms of investment on large office properties. And we're seeing, pricing trades in the downtown LA area up at around in the low $200 a square foot, but we're looking at pricing in the Century City in West LA in that $750 to $1,000 a square foot for office product. Same thing is reflecting on leasing as well. Probably a 2x or 3x margin in comparing the two.
On there live with Lou Horne, president of CBRE for Greater Los Angeles. And I think you said it, downtown Los Angeles is on sale. People looking for bargains, right, for office space. Very attractive places, right?
Yeah, if you're an occupier and you're looking to buy a building, it's a replacement office building is probably in that $600 a square foot range to build. So you can buy a building in the $200 and $300 a square foot range. A high-end Class A building, it's a great opportunity to do that. We're starting to see a lot of private equity that's interested in doing that, buying it at low points. And we're also starting to see institutional capital return to the West Side. There's several trades right now that are occurring on the capital markets where we're even seeing some institutional debt returning. So I do feel like we've hit a bottom. I feel like it's a lot more solid right now. We're starting to see more demand across the board, even in the surrounding markets outside of Century City, out in the Valley, out in the South, downtown Los Angeles. We're definitely seeing a lot more activity with design firms, law firms, the real estate firms, insurance companies, that sort of thing. So it's starting to feel like it's gotten back to normal. And we had, Frank, as you know, I mentioned earlier today, post-COVID and then just the first half of this year have been pretty relative to uncertainty between the fires, ICE, the border, the tariff discussions around industrial. It's been a very hectic and, uncertain market, and occupiers, investors, capital, they like certainty. So, we're really hoping that we settle down here. I think we have. I think on the industrial sector, we're starting to see an uptick in industrial activity. The tariffs, it did not have the same impact that we thought they were going to have, but who knows? That jury is still out, so we're keeping a very close eye on that. We need to look at things like ULA and other impediments to the marketplace that are concerning capital relative to moving into the market. And then there are other areas where the chamber is playing a big role, I think, in helping, express, good data to our elected officials to make sure that we're not doing things that are impacting our market in a negative way.
And, of course, a big part of the discussion today was focused on the reconstruction of the fire-destroyed areas in the Palisades, Malibu, and Altadena. Give us your assessment of how that effort is going.
Well, I think it's going well. I think we're past really the important phase one, which is, the scraping of the sites with the Army Corps of Engineers. Shout out to the Army Corps. I think the Army Corps did a great job in really, scraping the different sites. For those who opted in, they took out more than they needed to. There's a couple of open issues right now that we're trying to help with. We're working with the city and the county to try to create standards around environmental testing. We're also putting up an idea called the Builders Alliance, which is where we organize the top 20 large, mid-size, and smaller development firms that will have pre-approved housing plans where we can use fast tracking on entitlement work so that we can bring price points down to Altadena and also to Palisades, making the gap of insurance proceeds and actual rebuild much, much closer. Right now, there's a big gap, Frank. Most people were underinsured. The interest rates have changed, so there's a gap between the old, just completely replacing their existing home. So we're really trying to create scale by combining these different developers together and using the purchasing power of a lot of people, or a lot of developers and a lot of construction companies buying in the same, in a critical mass so that we can bring those prices down. So that's, I think we're going to start to see a lot more building. It's not happening as fast as anybody would like, that's for sure. But I think that we're starting to see some sticks go up in the air. And I think with some of the things that we're doing at ULI, it's making a big difference. We're focusing on new ideas around self-certification, which I think are catching some steam. The mayor and also the supervisor have both approved the usage of AI and also some self-certification that would accelerate the permitting process, which will make an impact not only now, but also after these fires. What we need to see is just more momentum and faster speed on the entitlement process side, the permitting side. So that's, it's slow but sure. We're hoping to see a lot more activity in the coming 12 months, that's for sure.
All right, and just the overall business climate here in Los Angeles. After all, it was the State of LA business event today. Your overall impressions, trying to cut red tape and get more red carpet for businesses here. What do you think needs to be done to improve the business climate here?
Well, I think the business climate, I'm noticing a change over the last 30, 60 days, actually. We're seeing more activity in the office sector. In the industrial sector, we're really seeing a reluctance for long-term leasing, a lot of 3PL work on the distribution side. There's concerns around energy, so a lot of people talking about build-to-suits, which are because of the specialization now of distribution and manufacturing. A lot of talk about ULA, not really wanting to build within the city limits just because of the concerns around ULA and rent control, that sort of thing. So that has spooked a lot of capital, a lot of investment activity. But we are, we've seen the vacancy rates on large multi come down to about 5% across the region, about 10%, 9% in downtown Los Angeles. So I'm feeling optimistic. We certainly have our challenges. We could use a little bit of help on the interest rate, which I think would spur a lot more activity. I think the big, beautiful bill and what we saw there with like this 1 year, 100% accelerated depreciation is playing a big role right now in activity on real estate and plant and equipment. So I think we're going to see some, additional activity happening there. So overall, it's feeling good. I think we're going to have a strong second half.
Wonderful. Lou Horne, thank you very much for taking the call, and look forward to seeing you at upcoming conferences, including a discussion coming up with the LA Taxpayers Association and many more, I hope, this year. Lou Horne, LA business and civic leader, president of CBRE's Greater Los Angeles region, chairman of the Urban Land Institute, also served as former chair of the LA EDC. Lou Horne, it's always an honor to have you with us. Thank you very much for taking the call with us here this afternoon.
Thank you, Frank, and thank you for all you do in reporting to our business community. You're the best. Thank you.
Thank you very, very much. And out to the freeways now, 790 KABC.
YouTube personality Benny Johnson has cracked the code on a new era of newsmaking.
Very controversial, very strong opinions. A person who speaks truth fearlessly, breaking for nobody.
It's a new cultural landscape.
We're not trying to politicize this. People are primed now, and forgive me, dude, it is what it is. Here's what's going on in your country, bro.
The Benny Show.
Get ready if this is something that you needed to put a little pep in your step. No? Yeah? Okay.
Follow and listen on your favorite platform.
Mottek On Money continues. 790 KABC. President Trump's tariff war inflicting almost $12 billion of losses on global automakers, the biggest hit they've faced since the pandemic, according to the Wall Street Journal. Front page article today, beyond the continuing cost of tariffs, they say the automakers here in the U.S., Japan, South Korea, and Europe face years of retooling and supply chain tweaks to adjust to new realities. This comes after they spent heavily to reshape factories for electric vehicles. Following all these developments very, very closely is Lauren Fix, our go-to car expert, editor-in-chief of Car Coach, and the co-host of the Total Car Score podcast. Lauren, thank you very much for taking the call. It seems hour by hour we get some sort of tariff announcements. Give us the latest here on the tariff impacts on the auto business and ultimately what we're seeing at the showrooms.
Yeah, there's a huge shift. As a matter of fact, I have a report coming out tomorrow at this time. Ford is planning to shift gears from their electric dreams back to gasoline, and that's fantastic because that gives you choices. So there's a lot of interesting things going on at the same time, starting with Ford itself realizes they took a $40,000 loss on every Lightning truck they sold. You can't make that up by increasing prices on vehicles that you do make money. And that's obviously reached some issues. So they're going to go back to building trucks with gas and diesel, bringing in more gasoline-powered vehicles, offering hybrids for those who want it, as well as still offering an entry-level EV. So on the 11th, which is next week, we're going to see an announcement from Ford. They claim it's the biggest thing since the Model T, but it's easy to make those kind of random statements to us, especially being the press. But we're hoping that they have something to compete with what we thought was going to be a success, which is Slate. We still don't know. My guess is it's going to be a Maverick-sized pickup truck that's going to be pretty much stripped down, and it'll be an electric version to make up that difference. And they can bring that to market a lot quicker than Slate can because they're not even talking about doing any deliveries of any type if they actually do make product until the end of this year, and Ford could definitely beat that. Other interesting things that are going on right now that are, I'm not really sure why, and we're looking into this, is I just got this notification before we went live, Tesla just let go of their people in their AI department, which makes no sense. The announcement said that Tesla disbands its Dojo supercomputer team, and that's a blow to their AI efforts. So with robotaxi coming out, we'll have to see how it impacts the stock market. I don't cover the financial side. That's your expertise. But that's a sign when things aren't selling and they're looking at entry-level cars like their new small entry-level vehicles. So we'll see how all that unfolds. So if you're thinking about a Tesla, they're not going out of business. No worries there. I just think that there's a lot of shrinkage in the industry across literally every brand. On some of the other brands that sort of are highlights, shall we say, Jaguar, the CEO that was all in on electric and did that absolutely absurd commercial that was not even showing a vehicle, well, he stepped down, and there's a new CEO in place. He just got started, so we're waiting to see if Tata, which is the parent company of Land Rover and Jaguar, that they're going to say, listen, we've got to offer hybrids. Electric does not work for everyone, and making a Jaguar that is so far off base from what their brand is about is not helping the sale of their vehicles or the classic cars. So we're noticing a big impact to the classic car side of Jaguar as well. And I'll be covering all that from Pebble Beach. I'll be there for the whole week for Monterey Car Week starting next week. And we'll have all the auction coverage as well as big events like Motorlux, which is absolutely the best way to kick off the event. And, of course, the Pebble Beach Car Show, the Concours, and I will be judging there this year.
Congratulations on that. That's fantastic. Always wonderful to have you here in California. And we have a dinner date at the Tesla Diner when you get here, too, by the way, when you come back for the LA Auto Show. Tesla stock, by the way, having a pretty good week. And I see the headlines here now. Tesla disbanding its Dojo supercomputer team in a blow to its AI effort. You think maybe, there's been a lot of merger activity these days, maybe like what Apple's been talking about, maybe merging with some sort of other AI entity. Maybe Tesla's thinking about that after blowing out their current AI team.
True. I think there's a lot of consolidation going on in the industry. Everybody's in a loss position. Every brand from Subaru to Mazda, Stellantis, they're all in a loss position. Now, you can blame that on tariffs, but I blame them on that not pushing back with all their billions of dollars in lobbying money. Car manufacturers allowed the government to tell them what to build. Even though they knew consumers didn't want it, they took a loss in every single one, but they let the government tell them what to do. When you let the government in the door of your business, they're not going to run it properly. They can't get the post office right. They can't get Amtrak right. So how in the world are they going to get the car industry correct? And now that it's going back into the control of the brands, we're seeing an interesting shrinkage as far as like events for us. So we get to see all the new products as it comes out. There has not been a lot of new product launches this year. And a lot of it is because they don't have the cash flow, and that's impacting their future products, and that impacts what you get. So I think there's going to be a big lull before the storm, and as they go back to retool and make decisions. A couple of the brands that are in really smart positions, one of them happens to be Ford because they didn't go all in 100%, even though they were pushing for that. I think they're going to be okay with the F-150 and the F-Series truck. But I also think that Hyundai Corporation, which encompasses on a global basis Hyundai, Kia, and Genesis, they build everything like a Lego. What do you want? We just drove the brand new 2026 Hyundai Palisade. They offer it in electric as an Ioniq 9.
Fantastic, Lauren. Wish we had more time. We'll have to stop there. But thank you very much for that comprehensive update. As always, we do appreciate that. Is Lauren Fix, editor-in-chief of Car Coach and the co-host of the Total Car Score podcast. Tesla stock, by the way, closed up more than $2, back to $322 and change. The NASDAQ ended the day at a record high at 21,243 of 73 points. Stay tuned now for the 790 KBC News Blitz with Randy Wang. And then tonight at 6, it's the Just Help One radio show and podcast presented by Union Rescue Mission.
I'm Paula Pant. I help people make the smartest money decisions possible because, let's face it, money's too important to wing it.
What you'll hear is a couple money geeks sitting and talking about this stuff that we're so passionate about.
You name it. Anything that's on your mind. Retirement, debt, student loans, saving for college.
It's a personal finance journey. It is a wide-ranging squirrel conversation about the topic of personal finance and good financial planning. Super fun.
Afford anything. Follow and listen on your favorite platform.